Alright, how's everybody doing today? Welcome back to the channel. In this video, I'm going to be talking about the top 5 stocks that you should buy or should actually look into for April of 2021. Now, these are 5 stocks that in my opinion, some of them I have. I think I own every single stock except one of them on this list, but all of these stocks are probably one of the most intriguing ones in the stock market for me personally for risk reward in that kind of standpoint. So we know this last month has been kind of all over the place recently, and it's kind of seeming like stuff is slowing down and hopefully it continues rising over the next year or so. But April generally is probably one of the best months, I think. Don't quote me on this, but historically, I believe April is probably one of the best or well performing months in the stock market overall. So that's another pretty interesting thing. But nonetheless, right before we jump into this list, if you haven't already subscribed to this channel, I'm trying to hit 1,000 subscribers by the end of this year. I think we're around 600. Sorry, not the end of this year, but I'm gonna try to hit it at the end of summer. So I think that's pretty doable. If any of you guys aren't subscribed to this channel and can just help me reach my goal, that'll be really appreciated. You get a lot of perks once you reach 1,000 subscribers, and if I can get that as soon as possible, that'd be great. But yeah, without wasting any more time, let's get right into this. The first one is Corsair Gaming stock. Now, I'm very interested in this stock and I have been buying it throughout the month of April or month of March, but I'm definitely looking to buy this more in April, especially if it continues to fall. Now, I made a video on this stock. I think it was before like November time, right? But when I made the video, it kept going up, and once it hit $50 a share, I was like, okay, I'm not going to be looking into this stock. Like, I'm basically not even interested anymore. That is way too overpriced. But what happened since then is that it kept falling all the way until under 30. So I told myself, if this ever went close to 30 bucks or under 30 bucks, dude, it was like easy money in my opinion if you have any long-term outlook into this. And it actually did. And it did fall. It fell just, I think, this week for a brief moment. It fell below $30. It was at 29 bucks for like, I think just a few hours. But I bought, I think my average cost is like 32 bucks or something like that, 33 bucks. But anything in the low 30s, very intriguing in my opinion. Basically, they're in the gaming space. If you don't know already, they do streaming. It's basically, if you think streaming and gaming is going to be bigger in the future, this stock is probably like a pure play on that. You have Elgato, which they own. They own Scuff Gaming, and then obviously their Corsair line, which is, they have crazy good reviews. Basically, the gaming space, if you have a bad product in the gaming space, you will get destroyed. Like, people will hate on you so bad. But their products, from I've been using them for years now, are very like kind of prestigious in the space. Like, everyone has only good things to say about Corsair most of the time. As you can see, the reviews on Amazon are really good. Now, if you go to a lot of like Best Buys and stuff like that, their products are almost sold out or have been for a while. So that's definitely something very interesting. But this stock is very intriguing just because the 4P ratio is very low. Usually, if you guys don't know, for a normal company, the S&P is usually 20, 25 usually. And obviously S&P grows a few percent every year on average, right? Usually anything around 5 to 10%, maybe a bit less than that. But Corsair just grew 60-70%, and they're expected to grow over 10% this year. I think they're going to do even more. But if they're going to grow over 10% this year, that's already should be trading at a premium. So already I think it's pretty overvalued, especially since how fast this company moves. And I think the management is very smart. The founder is also the CEO to this day, I believe. And they're pretty smart guys, the way they're going about it. And I think overall you can't really go long. If you have a long-term outlook in gaming and stuff like that, I think it's definitely going to be a good buy there. Next stock is Shopify. I have this pulled up on Robinhood for some reason, but Shopify is very interesting. It's obviously crazy overvalued right now, right? $1,000, it's up 100 something percent a year, but it's been flat since July of last year. Look at the price of Shopify. This is very interesting. It's been flat since July. It has barely moved. And then since December of last year, it hasn't dipped under 1,000. But I told myself it went up to 1,500 right now. So you're getting a discount from 1,500 all the way to 1K. Right now it's 1,100. And that's because today it went up like 6% when I'm recording this, right? But this company, in my opinion, has probably one of the best opportunities of reaching $1 trillion market cap. This, if you don't know what Shopify does, brief explanation is they do all types of basically, if you're a company and you want to have a website they basically help you create that website. They're basically the back end part of it. It's kind of like Wix.com. The only reason people know about Wix is because their commercials are everywhere. Wix.com, it's kind of like that, where they you want to make something, or like Weebly and stuff like that. But this company is by far the biggest. Like Wix is this fraction. Well, actually, they're probably like 20% of what Shopify is. But Shopify by far has the lead. Now, I've done Shopify in terms of I've helped like do graphic design on stores, so I know how Shopify works, and they've been updating over the years. I've seen Shopify change so much and improve. So they're definitely not a stagnant company. They're moving quite a bit. So as long as they execute, I think this company has a very good chance of being like $1 trillion market cap in the future, in the next 10 years plus, right? Probably in the next 10 years. I definitely not too far-fetched to see this at $1 trillion. But this is one of those tech stocks that has that opportunity. If you guys don't know, these are some of the companies that use it, like Turtle Beach. You have Kylie Cosmetics is probably the biggest company. This in itself is over $1 billion company. Forbes valued them at 800 million a few years back. Sephora is all on Shopify. I didn't know this, but Tesla supposedly uses Shopify. Now, I don't know. I think they might have like a specific deal with Shopify going on there. Like they're not a normal customer. So don't quote me on this, but they might use I don't know if this is correct, but if it is, that's insane. But nonetheless, they have Red Bull, Herschel, the clothing line. They have a ton of companies. Gymshark's another big one. Like if you're a YouTuber and you want to make a website selling stuff, it's probably going to be a Shopify store. And people buying from other YouTubers or other influencers directly, it's only growing. And yeah, that's just going to continue to happen in my opinion. And I think Shopify, as long as they continue executing easily, just because the way they make money is so clean, it's so nice. Basically, they have a monthly subscription model. So they basically have not guaranteed income, obviously, but they have guaranteed income. I love companies that do this, where it's guaranteed money month over month with their subscription model. But every time they make a sale, a percentage and some extra cents, I believe it's like 29 cents at sale, goes to Shopify. Now they help facilitate the transactions as well, but just that little percentage every single sale is crazy and actually allows them to grow exponentially, right? Let's say 1,000 stores sign up. Those 1,000 stores sell 10,000 products each a month or a year. That's all exponential growth right on top of it. So I just love their business model. It's very nice, in my opinion, for a company to be like that. And they not even Shopify, I believe they also own a few other companies as well. That's all just helping them grow. So it's very beautiful. Obviously, it's pretty overpriced today. So you have to have a long-term outlook. They have 40% growth this year, 30% in the future, and then so on. They're going to be growing on from there. And yeah, that's that. So it is kind of expensive just because if you look at the financials, right, they make about 34 billion. And then yeah, they're basically, you're paying. I don't think there's they are profitable, but their P ratio is freaking high. So yeah, you have to have a long-term outlook on this one. But talking 5 years from now, 10 years from now, this company has a very good chance of being like a real giant. I mean, it's already a giant, right? But it has a really good chance of being a huge giant in the future. And yeah, definitely take a look at this one. Next one, Facebook stock. Now, the reason I think this one is already up 4% today over the last month, right? It's up another 10%. I think this was in my list for last month as well that I was buying. I bought this stock just yesterday as well. I bought a bit of it just yesterday, just because I had extra money and I'm like, okay, I'm gonna just put some into this. This company in 5 years is gonna double. Like I'm very certain this company, the stock price at least, is gonna double in like 5 years, maybe, yeah, easily, and it's probably gonna triple by 2030, in my opinion. Triple, quadruple by 2030. This has a pretty good chance of being over $1 trillion in just a year or so, like easily. I talked about the stock a lot in the past. I'm not going to go too much into it. They own Instagram, obviously. The reason it's so cheap right now is because they want to split it up. I don't think the government's going to do it, because if you split up Facebook, you're going to have to split up YouTube and stuff like that. When I say split up, I mean Instagram and Facebook. They're going to have to split them up. But even if they split them up, these two parts separate are worth more than the whole piece together. Like Instagram is already such a huge valuation, and I think Facebook's already such a good valuation. It's probably going to be more than this market cap you see. They own WhatsApp, Oculus VR, I think, is going to be one of the reasons. I mean, just Oculus in itself is already a few billion-dollar company, in my opinion. And yeah, this VR is just going to grow from here. I like what they're doing there. And the ad space is just going to get bigger and bigger as companies as huge like Coca-Cola's and stuff like that realize how much potential there is with like Facebook ads, Instagram ads and stuff. But yeah, this stock I think is trading even below the average, even after going up a few percent today. But yeah, anywhere under, if you have a long-term outlook, under $300 is a pretty good price. But when I was buying this a month ago, it was like at 250. So 250s is really, really good deal. So if this stock weakens in April, like goes down to around 260s, anywhere near 250s, I think I'm gonna have to purchase more of this. So yeah, definitely keep a lookout on that. Next one is Tattoo Chef. I believe this is the fourth stock on this list. Tattooed Chef. I talked about this stock a few times in the past. It has it listed as a 12p ratio. That's wrong. Don't look at that. People might look at that and think, oh damn, this is like free money. But no, this is like not the case. If you guys look at I'm gonna pull it up real quick. But basically, they had one quarter, the last quarter, where they had a one-time like profit. I guess it's not really a profit, but basically when they filed to be a public company, they changed like their taxation with the company, and they got a huge, I think it was a tax return, or I don't even know how it worked, but they got a lot of cash back as a one-time payment. So yeah, look at this. They got more profit than they made, right? So that's like a one-time thing. So that's making this number bad. The real number is a little less intriguing, obviously. It's pretty expensive, right? 304 P. But I would completely disregard that just for the fact that they basically almost doubled their business last year, right? So you can kind of take that out of the water. They kind of blew it out of the water, especially their last quarter's earnings were kind of crazy. So I definitely think it's very interesting for like a Tattooed Chef. Now, they have Tattooed Chef doing, I mean, their guidance for 2026 is 1 billion in revenue. Now, I think they can do that sooner than that. I think 2025 they could hit a billion in revenue. And I did some quick calculations, right? It's kind of very rough calculations, but if you take 35% margin of 1 billion, it's like 350 million. And then I basically have them doing 350 million in profit, which is kind of not really that good because it's gross margin. They obviously have to pay for, like, I believe they have to also pay for like advertising and stuff like that. So there's a lot of other operation and stuff that goes into the margins, not only how much it costs to make it. But let's say they make 350 million in profit. I basically calculated them being at a 5p ratio. I basically took the EPS for 2025 and I just divided it by the shares outstanding. So even with the rough model, it's 5-4. That's a 5p ratio in 4 years from now. So if they continue their growth like they've said, and I think they're gonna beat it. So in 4 years from now, this stock could 5x, right? If you take 5 times 5, which is 25, which is the average S&P. I mean, this stock could probably 5x, but they have to execute on this. Definitely take a look at Tattooed Chef. I think it's a really good deal under $20. Dude, that's a really good price. A month ago, this was trading at 2022, and then at the highest, it was trading at 28. But this was, I think, before they merged. So, I mean, fair to say it was trading at 25, 26 at its highs. So you're getting it at a very good price because I think this company could be at around $5 billion easily 2026, in the next 5 to 10 years, right? This company can easily reach that market cap. Just the way they're expanding is crazy, dude. I've never seen a food company like they basically like overnight they got a whole shelf in Target, like a whole freezer shelf in Target overnight, which I don't even know how that's possible, but I mean, yeah, they did that. So very intriguing there. The last stock is Tesla stock. Now this company obviously hit all the way up to $900. Now I haven't bought this stock in probably a year since I bought it. A few years back. I bought this during the pandemic a little bit more. I increased my position, but since then I haven't bought Tesla. But even since the $900 highs, it's pretty low, right? It's like 670. Now today it's up 5%, which is kind of nuts. But this stock, if you guys, this isn't the best risk reward in my opinion out of the rest on this list. All of these stocks probably have a little bit better risk reward other than Shopify. But this probably has around the same risk reward as a Shopify, maybe even a little better reward in my opinion. Yeah, I mean, actually about same. So this, nonetheless, I do think Tesla is gonna be really good. I mean, the bottom line is 5 years, 10 years from now, I think basically if you're looking to buy a new car, it's gonna be electric. There's just no doubt about it. It doesn't matter if the government's gonna help. Obviously, I think I had it pulled up here, but obviously Biden's plans to make infrastructure for electric vehicles, even if the government doesn't do anything. The bottom line is 10 years from now, if you're looking to buy a car, it's probably going to be an electric vehicle, right? Every single company, even Volkswagen, said they're not even going to produce any more normal cars. They said only like 10% of their cars are going to be normal cars. The rest are going to be all electric. Dude, so yeah, there's just so many things are going on right for Tesla, and them having, I mean, the Model Y was the number one electric car in the world, right? So let's say everyone in 10 years from now, let's say 60, 70, 80% of people buy a new car are looking for electric cars, and Model Y is still number one. Whew, you have a massive amount of people buying Teslas, right? But that's probably not going to stay. Their market share is probably going to die slowly but surely. But I think 40% of people buying electric vehicles do buy a Tesla, which is very doable, right? 30-40% market share. That's kind of what Apple's doing. Like if you're gonna buy a phone, probably 40% chance the average person buys an iPhone, right? So I think they're gonna have that kind of market share where if you're trying to buy a car that's electric, it's gonna probably be a Tesla. 40% chance you're actually gonna buy a Tesla. And if you're talking about almost everyone buying electric cars 10 years from now, that's why I just continue to hold this stock. That's why I couldn't really sell it. Even at $900, I still continue to hold. Now, if this stock continues falling, I might buy it. I might even buy it at this price point, but I have other better stocks I think that could bring better returns. But if you're really crazy into Tesla, man, definitely keep an eye on this stock for April. If it continues to dip, if it does dip, even in this last month, it dipped to $560. So if you guys bought in that price, I think you got a pretty good price on that. So definitely keep an eye on that. And yeah, hopefully you guys enjoyed. Those have been 5 stocks that in my opinion, are one of the best stocks to buy in the month of April 2021. If you haven't done it already, make sure to subscribe to this channel. That'll be very appreciated. Drop a like on this video. It'll help out my channel. And once again, I'm trying to 1,000 subscribers by the end of summer or by summer. So if you guys can help me reach that goal, that'll be really appreciated. And I'll see you on my next video.